Well, good morning, everybody. This is the King Dollar Currency War Report, January 18th, 2016. Well, good morning, everybody. Happy Martin Luther King Day to you in the U.S. To have a holiday today, no work. But I want to give you an update on what's happening. In this video, which I'll put a link right there, I predicted many things for 2015, and pretty much everything came true with the exception of one prediction. I predicted that the S&P, the market, would go up by about 8% in 2015. My rationale was that as oil was declining, it would give a sort of a turbo boost to 90% of the S&P stocks, which are dependent upon oil as an expenditure, and those prices would go down, that expense would go down, which means that their profits should go up. But what we didn't know was that the reduction in price of oil is not just the fact that we have a surplus of production, an oversupply problem. The problem, which has been hidden by the Chinese, is the Chinese slowdown, which they have been hiding from everybody for more than a year. If we look at China's month-over-month imports of raw materials, we're talking steel, concrete, iron, coal, copper, they're down month-over-month for the last 14 months. That is a pure sign of a China slowdown. Now, they said that growth has been reduced from about 10% GDP growth to 7%, but more informed experts believe it's really around 3%. And really what this means is that the hyper-growth cycle of China is busted. It's over. Biadu, a Chinese search engine company, people call it the Google of China, has done its own research and determined that there are 50 ghost cities in China. That is 50 cities in China that were built during this boom to produce GDP numbers that practically nobody lives in. Okay? And we're talking about cities that are capable of supporting 1 million people, and there's a few thousand, if that, residents. Some of them are completely empty. Okay, so this has been pure government-sponsored GDP growth for no reason at all, aka a housing bubble. Now, if we just quickly look back, Japan, housing bubble. That was mostly a commercial real estate housing bubble. In the 80s, boom, decimated the country, and they still have zombie banks in Japan. Spain, Ireland, and the United States of America also had what you could call a housing bubble, which when they burst, devastated the economy and a lot of people's lives. Now in the US, it was mainly people who couldn't afford mortgages that were given mortgages, and then when interest rates went up, they certainly could not afford the new rates based upon realistic interest rates. Okay, and the Big Short, a movie that just came out, is a great movie to watch and see what exactly transpired there. Okay, so today I noticed that the dollar is buying 4 zlotys and 11 grosz. Okay, that is the strongest that the US dollar has been against the Polish zloty in probably 12 or 15 years. So that is really amazing for anyone who has US dollars and wants to travel to Poland. Now would be the perfect time. From my perspective, prices are basically stable and or are declining. I'm talking about food costs are going down. Sugar is definitely way down. Flour is down. Milk is down. Meats are relatively stable. They haven't gone down a lot, but they're pretty stable. So what that means is we are looking at actually deflationary pressures in the Polish economy, and the Polish zloty is actually getting weaker against other currencies, which maybe doesn't seem intuitive on the surface of it, but all of these consumables are being produced primarily in Poland, so they're not affected by currency swings. And the fact that the Polish zloty is getting weaker vis-a-vis these other currencies like the euro and or the dollar means that the potential to export is greater, and importers of Polish goods would be more in tune to buy from Poland. Really high quality products, safe, usually GMO-free, chemical-free, organic type products coming out of Poland. So that's really exciting news for those of you who want to travel or those who have any kind of investments in the Polish economy. I think it's going to continue to do well. So that is your update. The other prediction was that we would go to parity and beyond, dollar versus euro. We got as close as 104. The euro buying as little as $1.04. We didn't break parity. Today we're at 109. So there is still the possibility for the dollar to go to parity with the euro in 2016 because the ECB, European Central Bank, is continuing its quantitative easing. The Federal Reserve has stopped quantitative easing. I don't see them coming back with it. I do now that the United States economy, the US economy has, let's say, softened due to China's compression. I don't believe that the Fed will raise interest rates any further. Now, last year, I thought because the economy was doing relatively better, we could have supported 2 small interest rate rises. We got 1. That's it. I think it's one and done. I don't know that we'll have any more in 2016. Possibly by mid-year things stabilize. But you can see that the U.S. economy is still fragile. Let's call it fragile. Not necessarily weak, but it's fragile, right? And I don't think that we will get any kind of serious economic growth back until we get a new president. Hopefully it's a Republican. And the mood of the country, the mood of the job creators changes, that they want to have confidence in the economy and start investing in the U.S. Especially if we get someone who can bring back all of the American corporate profits. 2.5 trillion minimum is estimated to be offshore. Bring that money into the United States to invest back in the United States, where most of these companies want to be investing. So that is your Currency War 2016 update and King Dollar report. I'm Julio Joe Rock and Roll. Thank you for watching. This has been In the News.
For watching In the News, a feature of HJRR TV and presented by the Reverend Dr. Holy Joe Rock and Roll. Please rate us, follow us on Twitter, and subscribe to this channel for more In the News.